You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is time once again to rock out with everyone's favorite bi-weekly options program. Yep, it's time for the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program right now. If you guys aren't making the live stream, first off, you should join us every Monday and Thursday, noon Central, 1 p.m. Eastern. That's where this show kicks off. Lots of other things popping off on that live stream throughout the network, I should say, throughout the week as well, including yesterday, Education Wednesday. We had boot camp. We had OPR hitting all that good stuff. But if you'd like to hit it live, join us on the Mixlr there. We're always exploring alternative ways to get it to you live as well. Some people have requested Periscope, YouTube Live, and things like that. There's a lot of other elements that go into streaming live on the video side of that, which is why we keep it to the audio spectrum for now. But we are exploring. In the meantime, we do make it available after the fact on YouTube. You guys can check it out there if you are so inclined. Wherever you find it, YouTube, live streaming, on the podcast, make sure you leave a review so other folks can continue to discover this program. The more the merrier, and we are seeing a lot more of you these days as everything's in tumult. Everyone's looking for some answers. We got you covered here. And, of course, keep those questions coming. We do love to hear from you guys. And joining me on the old program today, first, we go out to the hinterlands of these fine United States. What was once known as the options mecca of the United States now doesn't even rank in the top 5. Yeah, I'm talking about Maine, where on the far shores is housed the rock lobster, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program, sir. Have you overcome your shame at being expunged from the top 5 of options meccas, sir?
I don't know if I've overcome the shame. However, I've tried to join an option club in Maine, and I have not been able to contact the moderator. So, you know what? I guess it's just all coming full circle and just raining on my head, basically.
He's like, the rock lobster just joined. So he's the go-to guy for options in Maine, so I'm just going to cede it to him. So I guess you don't know. You're the moderator now, sir. Congrats.
Exactly.
I guess you and the one other guy who trades options in Maine getting together in a nice little club. If you trade options in Maine, hit up the rock lobster. You can make a nice little threesome club over there, and you can discuss whatever suits you there in the world of options, in the former options mecca known as Maine. And also joining us from a little bit closer to home, a little bit closer to the true options mecca we all know and love here as Chicago. We're going to go right outside to a little sleepy hamlet known as St. Charles, where we're joined once again by the uncleest of Mikes, Mr. Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. To you as well.
Always a pleasure to be here, and maybe we can work to make St. Charles the options mecca of the world. I'm trying.
There you go, one at a time. It only took one guy in Maine, so you get a handful in St. Charles. It may hurt you being so close to Chicago, because that's going to kind of skew the results a little bit. They go by state, so it may hurt you in that. But if they drill down city-wise, maybe St. Charles has a chance. Looks like D.C. is kicking the crap out of it right now. Everyone apparently loves options at D.C. Go figure. And we'll go figure for ourselves what the heck's going on in these markets as we head on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we talk about what the heck is trading. And it's been quite a while since we've talked about an easing of the bull, yet the bull seems to be relaxing today. You got to go all the way back to like late June to find the last time really S&P, outside the last few sessions, outside the S&P really closed or even traded off. It's been that long of a bull run out here. Coming into showtime now, most of the major indices, with the exception of the NASDAQ, in the red, the S&P off nearly 0.75%, Dow off over 1%, about 1.25%. NASDAQ actually in the green, up about 0.2%. Gold and crude also taking a bit of a break. WTI back below the 40 handle, probably get into that more on TWIFO a little bit later today. Gold still hovering around that 1800 level, 1804, almost 1805 out there. Gold, of course, getting a lot of lift of late. Probably break that down maybe on TWIFO as well. We'll see. It's up to you guys what we talk about on TWIFO out there. So that should be fun. And, of course, our old friend, ye old VIX Cash. Come into showtime. It was at about a 30.5. That puts it up about 3 handles from where it was last show. It has since drifted down a little bit. It's now down to right about the 30 handle, a little bit below it. So that puts it down a half a handle from where we came into the show, puts it up still up from last show, about 2.5 handles. So VIX staying firm, VIX staying frothy out there, perhaps signaling there are indeed more shoes to drop. And of course, we're getting a rare sell-off. So that's got to give us some vol, right? Because we haven't sold off in so long. Of course, all these sell-offs coming on the heels of some, I guess you can call them kind of weak jobless. That kind of depends, like all these numbers, like all economic data, kind of depends how you read the tea leaves out there. Initial jobless claims fell by almost 100,000 in early July. That's a 4-month low of 1.31 million, so that sounds bullish. But the pace of layoffs still pretty high, and maybe signs that in the future could be drifting in the wrong direction. Economists had polled about or forecast about 1.4 million, so that comparatively is better. But I guess if you add together all the various ways you can count unemployment these days, all 8 state and federal assistance programs, then the claims on adjusted basis are about 32.9 million, and that's an increase from the 31.5 million in the prior week. So I guess if you add in all the different ways, and we all have heard the various ways people are applying for these things now, it's not just the simple one size fits all anymore. If you add all that together, apparently the picture not so rosy. Also hearing, I think, some dubious numbers out of Walgreens Boots Alliance, one of my favorite sci-fi named companies out there. All of that kind of combining to weigh on the market. Also, there's got to be some profit taking in there as well. The bulls have been on the rampage for the better part of a few weeks. It's got to be a bit of a break baked in there somewhere, and seems like we're getting that today. VVIX at about a 118. It puts it up about 3.5 handles from where it was last show. And VXX coming at showtime was at about 33.75. It puts it up about 2 handles. So everything a little bit more frothy since our Monday show. That's kind of where we find ourselves in the market today. Let's go back around the horn the way we came. Let's start in the land of the moderator of the main options club, a.k.a. the Rock Lobster. Mr. Rock Lobster, sir, what is lighting up your tape in these frothy markets, sir?
Well, how about the frothiest of froth? Tesla, Apple, all of the big names, Alibaba. I guess apparently when the Chinese government says buy stocks, everybody just piles in. I think Alibaba's up $50 in 4 days, something like that. So I would say, what I would say is, I think everybody loves the big tech ones. Everybody feels safe because they only go up. And every other, what I'll just call the Main Street stocks, are just decimated, really. I mean, any business that existed before 1990 is just in tatters. Everything, airlines, casinos, like every business, just a lot of them are struggling. So technology is doing great because apparently technology is the only thing that's going to work in the post-COVID world, but all the old economy stuff is gone, dead. So a really weird. It's like two markets, and I'll be interested to see what TOSAW is. I think long-term buying opportunities for Main Street stuff looks pretty good. However, when you look at it, I think you're taking the long view, but you're getting prices that we haven't seen for like multiple years. So will oil still be a part of our economy in the next 10 years? I would assume so, but and I think there's been some adverse setbacks with possible new president, all that kind of stuff, like weighs on the old economy. And I think the new economy is getting bid up quite substantially, like the green stuff, because I think Biden's going to, he's got a big lead in the polls and he's going to push through an agenda. So like right now, there's like a pretty big disconnect between those two industries. It's like as big as I've ever seen. And, the only way to really ride when you got First Solar and Tesla, I guess that make money. Tesla, I guess everybody is disagreeing on how they make money, but it doesn't matter because the stock's up 45% in 2 or 3 weeks or less. So money's going into the green economy. If you look at it, something else you could follow is TAN. That's a lot of solar semiconductor stuff, like solar panel. So I think it's like two different markets. Social media is still very strong. And VIX itself at 29, okay, we have a 30 VIX. The market's down 1.5%. Couldn't really sell off much more than that. And I think that's what we have. We have this tale of two different markets, and at least for today, I don't think it's going away in any way, shape, or form. Apple somehow, even though it's been around since before 1990, is, I don't know. I see that the 400 number seems so close before earnings, even though it's only a couple of weeks away. But just again, very strong looking stock, and other, like, again, old economy like Berkshire Hathaway, just weak. And what's funny is how much of Berkshire is Apple. I think it's the cheapest way to buy Apple at this point. I don't remember how big the Berkshire holding is, but I know it's enormous. So, is buying Berkshire the cheapest way to buy Apple? It could be. So anyway, that's what I have. Just there's, so many currents. There's more COVID cases, but is it causing more deaths? Is it because we're testing more or because we're not doing what we're supposed to do? Like, there's so many currents in the media. It's like your head is swimming. And I think for right now, the market is swimming a little bit, kind of not hard to grab onto anything.
Market is definitely swimming out there. I never thought about that. Absurdly expensive stock might be the cheapest way to buy Apple. AKA the Berkshire Backdoor to Apple out there. Let us know your thoughts on that. I'm sure you won't be shy. Berkshire, Apple, you guys are not reticent on opinions on either of those. Now we turn to another man who's not too reticent on opinions himself. The uncleest of Mike's, Mr. Uncle Mike TOSAW. Mr. Uncle Mike, sir, what make you about the Rock Lobster's idea of the cheapest way to buy apples through Berkshire Hathaway, and what else is catching your eye and lighting up your tape today, sir?
This just goes to show all the new ideas that come to this show, because in all the years I've been in this business, never once have I thought, okay, a good cheap way to buy Apple would be to buy Berkshire. And kind of makes you scratch your head a little bit and makes you think. So definitely no shortage of ideas on this show, which is a great thing. So with this, a couple things that are going on right now. The first thing I want to talk about are the presidential polls. Now, not trying to be political, but the thing I do want to remind our audience of is that if you are trying to invest based on a Biden victory, or with that assumption because maybe he won't be friendly to oil or whatever, just have an understanding that the polls became a total farce in the last election. And so that, along with the fact that there is a silent majority in this country, meaning that, once again, not trying to be political, but if you do say, I'm a Trump supporter, then there's you, and you have 10 random people in the room, it's very likely you're going to tick off at least one of those 10 people. And so it's because of that that Trump supporters typically don't say that they're Trump supporters. Now, with that being said, my point is that don't rely too much on polls, even if Trump's ahead or Biden's ahead or whatever, because they did prove to be not very scientific in the last election. So just kind of take that with a grain of salt. Now, trading based on what the numbers currently say, that's one thing. So in other words, if all of a sudden Biden takes a big lead, then maybe you want to take action on a stock or on an indice or something that would be friendly to that result. And then based on maybe Trump takes a lead, invest in some industry that would be friendly based on such a thing if he were to win. But once the actual election occurs, it could be a totally different story. So that's just the one thing that I'd like to emphasize going into election season. That and the other thing is please, Vice President Biden, President Trump, please have a debate. I would love to see something like that. If you can't find anything, we'll host the debate on this show on the Option Block. Mark Longo will be the moderator, and we'll do it on this show. You can do it via Skype. You'll be social distance. We'll do a debate, please. I would love to see that. So that's another thing that I would like to say. But in relation to the markets as they stand right now, we are still in a spot in this market to where we're still channeling between the 300 and 320 level with the S&P or with the SPY. And so we've had a hard time getting getting all the last week. We've had a hard time touching the 320 level, but we still haven't tested it yet. So we still could have another little bit of a run up. We're still kind of messing around in the middle, or as I like to say, it's in the diddle in the middle, so to speak. So that's one thing that's going on with the markets at this stage. I'm chomping at the bit. I can't wait till we go positive on the year, if we go positive on the year, so I can really put more chips on the table, so to speak. But for right now, the one thing that I'm looking for as a short-term premium seller or premium buyer is I'd like to see a little bit more of a dip before I would get into anything. My rule dictates that I'm not going to have more than a 5% initial allocation for my aggressive trading money. And so with that 5% of my aggressive trading money, reminded my clients, of course, I am looking for a little bit more of a dip at this stage. So would like to see that. Earnings are going to be starting to come out in the near future, so curious to see how that is. The other thing that we need to watch for going forward is our company is going to give guidance. A lot of them are not. That seems to be a new trend on Wall Street, is that these earnings calls, what's your guidance? We don't have any. So it might make the call easier for the CEO that's doing the conference call, but for the time being, it seems to be socially acceptable to not give any guidance, and that may be good. It might eventually be bad for the market. Who knows? But just kind of take that with a grain of salt as you're investing and buying this market, is that there's really no need, there's no push for guidance from companies, and a lot of them aren't giving it. So we have that. In terms of the sectors, financials are definitely one of the weaker ones today on that. And the other things that I'm looking at throughout the day are going to be basically how the market reacts to the different currents of news, as Andrew described. And that, yes, we're having record amounts of cases of corona, but does the market care about that? The market may or may not care about that if the death rate isn't very high. So let's say that we determine as a society we have way too many cases, we need to shut down, and we don't want to risk more of a death rate, so we're going to shut down. Well, that's obviously going to be bad for the market. Now, let's say that we have the caseload goes down and the death rate goes down. Well, I think that's going to be very bullish for the market. What remains to be seen, and what I think the great unknown factor in this right now, is if we have greater amounts of cases, but the death rate is going down significantly, meaning that it's just younger people that are getting this and it really doesn't hurt them that much, or healthy people that are getting it and it's not hurting them that much, then are we going to go back to school? Are we going to go back to work? Are we going to go back to college? That's what I think the biggest unknown is at this point. And I think that's kind of what's led the market to this channeling effect. And that if we have the worst case scenario, meaning more cases, more deaths, we're shutting down, then it's not going to be pretty. I think the market's going to go down like a rock. But if we have a situation to where the death rate is lower and our caseload is lower and we're starting to open up, then I'm very bullish because of the fact that that was the reason that the market was held back in the first place, in my opinion. And now that that reason is gone, combine that with all the stimulus money that the government threw in, along with the low interest rates, then that could be, in my opinion, could possibly be the bullish opportunity of a lifetime. But once again, we're not at either of those extremes. We're kind of at a spot where cases are going up, death rates, not really. And that's why I think we're channeling at this point. So that is my 2 cents as to what is happening in the markets today.
Yeah, getting back to your earlier point, I can't imagine anyone has any reliance in polls anymore. Just the last few election cycles, have we not learned our lesson? Go back all the way to Kerry and Bush. Kerry was winning the exit polls on that morning of the election. People were on the major news outlets from Kerry's team gloating that they had it in the bag. And that changed, obviously, on the dime out there. We all know what happened last time with Trump and Hillary. So the notion that anyone's putting any stock in polls, let alone this far out, to me, is just laughing. You can't even rely on exit polls. How the hell can we rely on a poll in July? It's absurd. I know what else is absurd is what's going on in the market out here today. Let's see if that translates into a little bit of volume. Let's look. Let's start in the old VIX cash. By the way, I'm hearing some reports Mixler's having some issues out there. So if you're in the chat and it's kind of spotty, A, blame them. And B, just power through it. If it keeps dropping you out, then, of course, you can always check out the on-demand version that I know most of you like out there. But, yeah, keep powering through it if you're there in the chat, sir. I think they'll figure it out over there on their Mixler. And let's see what VIX is figuring out. As of a few minutes ago, VIX had about 185,000 contracts on the tape. The ADV a little bit north of 400,000, about 404,000. SPY, 3.11 million. The ADV is about 5.3 million. The S at about 464,000 as of a few minutes ago. The ADV, 1.15 million out there. The Qs, 903,000 contracts. The ADV, 963. So the Qs pushing their ADV already. And the IWM at about 430,000 contracts. The ADV coming in a bit. It's at about 661. Let's move on to the most active single names out there. Once again, we're talking electric cars out there, the hot thing. Number 10, Nikola. 237,000. That's another thing. Cost you 237,000 contracts to break into the top 10. That's roughly about 100K more than a typical day, maybe 80-odd thousand out there. So an interesting day from that perspective. Number 9, Facebook, 257,000. Number 8, Tesla. Tesla all the way down at number 8. A paltry, a meager 302,000 contracts out there. So you know it's an interesting day when Tesla isn't even up there. By the way, Tesla only up $10 today, or not even a full percent. So who cares? It's a non-day in Tesla land. Tesla, by the way, at 1,375. It's hard to say that with a straight face, listeners. But we'll keep rolling. Number 7, Space. This is, of course, Virgin Galactic. Trading right now $18.79, up about $2 or nearly 12%. So a good day for them. And 324,000 contracts on the tape as of a few minutes ago. Number 6, Roku, back in set-top box land for number 6, 346,000 contracts. Number 5, NIO, move up to 350,000 contracts, back in electric car territory as well. So electric cars, taking up about electric transportation, Nikola's not really cars, is 30% of the top 10 today, which is interesting. Number 4, Microsoft, 353,000 contracts. Numero Trace, Baba, at about 378,000 contracts. Number 2, Apple. Apple not even in the top spot today. 523,000 contracts. What could supplant Tesla and Apple? It's AMD today, listeners. 574,000 contracts. It's also, actually it's not, but it's close to our most biased paper. 82% of that coming on the call side. Actually, if we go to Space, which is Virgin Galactic, they're at 86% of that paper on the call side. 83% for Roku. So, as is usually the case, our top 10 is call dominated, and 3 of those names over 75% pretty firmly. So, actually, if you get Microsoft there at 76 and Baba at 81, you get a lot of the names, actually. About half of our top 10 is over 75% call bias. So, interesting things afoot out there. Speaking of things that are afoot, earnings season is afoot yet again, listeners. Or we're pretty much on the edge of it. We're about to really get back into it. So if you're saying, I need a little bit more micro in my life, here we go. We're back on the rampage. That means the earnings moves and earnings move results reports going to be back in fashion fairly soon there on the Options Insider. In fact, they never really stopped. They're going up there all the time. Even when earnings season isn't hot and heavy, we're still adding new move and move results reports, including for this week. We got some names popping off this week, including the aforementioned Walgreens Boots Alliance. Before the bell today, after the bell, WD-40. All of you who keep track of such things going on in the lubricant space, there you go. Tomorrow we got the Greenbrier companies. They supply a lot of equipment and services to the freight transportation market. Next week, though, we got some big names popping off. We got Pepsi, we got Citi, we got JP Morgan, Wells Fargo. You know, the financials really kick it off, and they're coming in hot and heavy next week. Goldman, PNC Bank, Alcoa used to be the big dog, kick off earnings season these days. Aluminium, not really doing it for a lot of people out there. Abbott Labs, got Domino's Pizza. They've been tearing it up of late in this quarantine. Netflix also as well next week, and Morgan Stanley. So a lot of names that we also have the earnings move and earnings movie results reports for them. Well, not results yet, but earnings move reports for them. Let's pop off a couple really quickly. Let's go to JP Morgan, 93.30 as of the time of this report. They were pricing in $2.19. Past, they've moved to $1.64. So pricing in a little bit more vol this season, maybe. Interesting. Wells Fargo, let's see if they're doing the same thing. 24.5 as of the time of this report. They were pricing in 92 cents. In the past, they've moved 59 cents. Perhaps a trend is emerging out here. Let's look at a few others out here. Let's go beyond just financials. Johnson & Johnson, they're at $143.25. They were pricing in about $2.50. In the past, they've moved $3. So they're kind of bucking the trend. Let's see if the Widowmaker is keeping pace. That's Netflix. It was at $5.02 as of the time of this report. They were pricing in nearly $26. And in the past, they moved $29.04. So Netflix pricing in a little bit lighter vol. Interesting. So perhaps not quite the trend. Let's look at financials. Another one, PNC. They're at about $100 even at the time of this report. They're pricing in $235, and in the past they moved $219. So maybe at least for the financials, they're pricing in a little bit more vol this cycle, which maybe wouldn't be surprising given what we've seen, the wreckage out there in the financial sector of late. Maybe some other names, not so much. If you want to check out all that for yourselves, you know where to go. TheOptionsInsider.com. Click on the Options News and Articles tab, and you're off to the races there. Meanwhile, we're off to the races into the next part of our show. It is time to go into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we unleash our Eye of Sauron, see what it comes back with. This time we're going to kick things off with one that it came back with a little bone, I should say, that our doggy brought back to us on Monday's show. So a very quick turnaround for this one. We're going back to everyone's favorite name out there. This is, of course, GNUS. All the news is good GNUS with Gary GNU. For those of you who old school Great Space Coaster fans. But GNUS, a.k.a. Genius Brands. Of course, it really stands for genius. But we like calling it GNUS. It's far more fun. And at the time, on Monday's show, Mr. Rock Lobster, this was a weird one, which is why it made our list. At the time, he profiled about 1,200 of the July 1.5 calls, so $1.50 calls, expiring tomorrow, the 10th. So this is a weekly play on a Monday. Someone gobbling up those 1.5 calls, and they paid a whopping $1.50. For the 1.5 calls. Now, bear that in mind. We kind of parsed this a little bit on Monday's show. This is the stock that was trading a nickel not too long ago, and also was trading nearly $12 not too long ago. So it has the classic pump and dump kind of chart on it. Now it's well off those levels. At the time this print went up, the stock was not that far, I believe, from that 1.5 level out there. So they needed a pretty big move out here. At the time, he called this just kind of a absurd trade on just about every level. The notion that someone would pretty much buy an option that is the same price as the strike that they're trading, that they're doing it on an option or a stock, I should say, that was trading a nickel not too long ago. All these things just kind of make the old school market makers' hairs on the back of my neck kind of stand up and take notice out here that maybe something weird and probably not good is afoot out here. They do have earnings, but on the 13th of August, so they're not in this weekly cycle. A total of 26,000 of these things traded on Monday's show, or during the show, I should say. So it was a pretty popular contract. And coming into today's show, GNUS has moved a fair amount. Coming into the show today, it was actually at $2.50. It has since sold off today. Now it's at about $2.38. So it's up. It's up about 80 odd cents from that strike where this went up. Unfortunately, he paid $1.50. So as you said before, when you're buying premium, particularly in the weeklies, you need to have that move happen, and you have to have it happen pretty quick. Otherwise, that nasty beast known as state of decay kicks in, and we all know what happens from there. And so he's got his 80 odd cents. Unfortunately, it's not enough. Mr. Rock Lobster, I'd love to hear your thoughts on all of this, on a name that was a nickel and then $12 not too long ago, and then was trading around $1 and change when someone came in and paid $1 and change for the 1.5 strike calls expiring on Friday. What's not to love about this trade, sir? It's got everything.
Doesn't it feel like it has all of the hallmarks of just a massively confused trade? Like, okay, you're buying the 1.5 calls, they're expiring, you're buying them. I'm just looking at the open interest on them right now. There's still some volume. Even today, the threes are trading 2,200 contracts. Like, what the heck is this stock? You know, I'm like, the open interest is absurd, by the way, on this thing. So I don't know what Genius Brands does. Do they do some sort of social media, something? I mean, I don't know. But anyway, it's a bit crazy as far as this goes. So there's still, now I'm seeing the open interest on the 1/2s as only there's only 347 of them right now as of today. So I'm not sure what they actually, what they're doing or what they did, to be honest.
Are those the regular monthly or the ones expiring on the 10th?
Well, I have the ones expiring on the 10th. The open interest today is only 347. I see the 2s, 25,000, the 2.5s, 13,000. So I wonder if they hit the exits on this thing. Not very long ago. Let me take a look here. Genius Brands, and I'm just looking for a 1-day chart. Let's see here. Wow, what a crazy stock! Like this is everything is crazy about this stock. It traded as high as 380. Let's say Tuesday, Monday. You guys highlighted this. Yeah, I mean, they might have had a shot to get out. I don't know what they did though, but I was trying to look for a volume spike as well. It looks like all the volume went out on Tuesday after somebody purchased these. Is from what I can tell. It had a spike. There was a huge volume spike on Tuesday, and now they might have got out. I would have to look for the closing prices, but they might have got. I don't think they did a whole lot better than what they paid though.
Yeah, this is the crazy one. I'm looking here. There were 4,000 went up on Tuesday, and 24,000 went up on Monday out there. It's because a lot of that was back and forth churn and burn on this strike as well here on Monday. So not all of it was additive because the OI only gapped up about nearly 4,000 on that day. So a lot of churn and burn on that strike on Monday, listeners, when we were talking about it. You seem like net about 4,000 added and about 4,000 traded on the 7th. So maybe they got out of Dodge. Out of here, it's a weird one. It's on just about every sense of the word, listeners. This one is a bit of a weird one out here. But you know what? We can spend a lot of time on this one because it's weird. Let us know what your thoughts are. Would you ever put this trade on in your own portfolio? I can probably go out on a limb and say most of our listeners would not. They're savvier than that. But sometimes it's the only way to get a stock that's as insane as this is to do something as insane as this if you, for some reason, you really feel like you need exposure. And it did move. It moved 80 odd cents, just not enough for his $1.50 calls to pay off here. We still another day. There's still another day, listeners. So perhaps more can unfold. It does seem like maybe he did take some of these off. It is a little bit confusing with the slew of July expirations in this name. Exactly what the hell happened out here this week? But either way, we'll keep an eye on this for one more day. Let's move on to another name that's a little bit more equitable, because this is Equitable Holdings, Inc., ticker symbol EQH, at about $18.30 right now, off 88 cents, or about 4.5% out here. This is the name that over the past year has had an interesting run. A year ago, it was trading about $22, trended all the way up to 27 and change in mid-February. Then we all know what happened. The big V. The first leg of their V, they got down to, looks like about $9.89. So they took a nice drubbing. And then they bounced up pretty quickly. Within a couple of weeks, they were trading, looks like, my graph will play. There we go. Nearly $16 again, $15.80. So they bounced back pretty hard. And then kind of sold off again down to 13. So they had a lot of fits and starts along the way. The second leg of that V wasn't as straight up as it was straight down out there. It's like they peaked in early June 8th, at 23.05, and have since kind of come off that about almost 5 handles now, where they are $18.32. So it's been an interesting run for EQH out here. Let's see what our Eye of Sauron uncovered for us here, listeners. Going out to AUG this time. AUG 15 puts going up for 28 cents. This was a pretty truck-wide market out here. There were 10 cents at 50. So a 40-cent wide, 40-cent wide market for a 50-cent put. These went up for 28 cents here, about 5,500 times over there on the SIBO, actually. So I guess you could say it's leaning towards the bid for premium harvesting, but again, this market is so absurd. It's kind of hard to really read much into this one at all. Let's see, where are the earnings? Yeah, this is a bit of an earnings play because there are earnings on the 6th. So perhaps someone saw the recent sell-off down to $9 and change. Maybe got a little bit spooked, saw the recent rally, and then saw the fade of that rally and said, you know what? I need to stop myself out at this 15 handle. I'm going to pay 28 cents for that privilege. Also, maybe a little bit spooked about earnings coming through this cycle. So he gets protection through that as well. Mr. Rock Lobster, are you thinking he's buying these bad boys? You think he sold them for nearly 30 cents? It's kind of a coin flip here. And then, B, what's your thoughts here on just in general this weird put trade here in everyone's favorite Equitable Holdings?
Well, I'm looking at this one, and this, I guess, because this one actually is like every once in a while, on the show, I get like a little tingly, like what is this really like an opportunity type of trade? And, this is just a retirement specialist, kind of a sleepy retirement specialist type company. Actually, I think they might even be based in Europe. I can't quite remember, but retirement, like kind of vanilla, but oh my gosh, just not a huge dividend yield. I'm just looking at the dividend. They just paid a 17-cent dividend. They increased their dividend, for crying out loud, in the middle of the financial crisis. So apparently, they're still doing okay. To me, this definitely feels like a line in the sand put, Mark. Like somebody's like, okay, I'll take the, that's not a bad yield, 2 or 3% till August. And it looks like kind of like, I don't know if, let's see, November, August. So outside potential for a wheel trade to get the divvy, but it's not a huge dividend, but it just kind of looks like one of those vanilla financial companies that's pretty solid, and it's just been caught up with the rest of the market. Although it has been, just a couple. 3 weeks ago it was $24, and now it's $19. Again, so this is like more of that Main Street thesis, where if it's Main Street, they're crushing it. And there's worries about what the government's doing, and are they going to do another stimulus? Do they need it? Who knows? But this is one of those companies that have fallen in the net, and I think actually this is a fairly decent wheel play for somebody that wants to get into a stock like this at a lower price. Not a bad yield right now. Those puts are actually, I think, 35 cents. You could probably sell them for the August. You probably get 40 cents for them if you wanted to right now, from what I can tell. So I do. I think this is somebody's just playing the wheel. They're riding the wheel.
Riding the wheel, or as the folks at RCM call it, the triple income strategy. All right, we'll put these in the to be watched category. We shall see who is correct, sir. I could see an argument for either way out here. It's an interesting one. As we keep on rolling, see if our last name can keep up that interest level. This is First Bancorp, another cheapie, trading $5.12, ticker symbol FBP. It's a publicly owned financial holding company out of San Juan. I wonder why they would be in San Juan. Could it be for tax purposes? Who knows? A year ago, they were trading, a little bit north of where they are right now, $11.05. And they said they've kind of had a bit of a run of late to the downside. In mid-February, they had trended down already, down to about $9. Then the big sell-off came. They hit a low of $3.50 in the big nadir of March 20th. Then they kind of had some fits and starts along the way, back up to 6 in April, back down to 4.5 in May and stuff. So back up. It's like they peaked recently at nearly $7, $6.92 on June 8th again. So another name that peaked on June 8th and then has had some trouble ever since. Right now, we said $5.12, off about 12 cents or almost 2.5%. Let's see what our Eye of Sauron found out here today. We got some, looks like, old school call love, Mr. Rock Lobster. Got the FBP SEP. 6 calls. Going up 5,000 times for 30 cents, as the Irish would say. Pretty much lifting the offer, pretty darn close to it. All this going up over there on the MIAX, our friends over there in Miami, by way of Princeton. A total of nearly 10,000 on the day, so someone liking these bad boys. So, Mr. Rock Lobster, we got a name that's kind of been beaten up. A year ago, it was trading $11. In the Great Nadir, it sold off to 3.5. Now it's up to about $5 and change, but it seems like it's had some resistance at around close to $7 recently. It bounced off that pretty hard. But someone's saying, you know what? I am not deterred. I'm going to take around 10,000 of these bad boys, going out to SEP on the 6 strike for 30 cents. What say you, sir, on a little bit of call love here in First Bancorp?
Well, as of right now, they're going to go home with the nickel mark in their favor, so that's going to help. So I will you got to have all your dirty laundry on this show. And I started buying some bank stocks a couple weeks ago on that first big pullback, and I was early, so I'm a little underwater. I got a lot of time on them. They're stuff I'm adding to the retirement account, but I'm also using some long calls and call spreads to just kind of jack the leverage up and leave the cash around just in case. But I like this idea, but I've been early. I'm definitely early, and everything's pretty much since we had the crisis and we had that big run up. I think today is probably a lower area for what I would call the Main Street stuff. I'm still buying it. Right now it's wrong, but I like the idea. But for now, it's been wrong. But I think this is, you got to look at it. You could buy 1,000 shares and spend $5,000, or you can buy a 10 lot for, 35 cents. It's $350. You leave the rest of your cash around, and you see what happens. If you need to make that money back, you sell a put maybe if the stock really gets pounded. But I think, if you use that, and I'm sure TOSAW could talk to someone who uses a lot of options for strategy and leverage. And I think right now, just because like some of these pullbacks are so huge, like look at some of the bigger banks, main banks, and how big the pullbacks are, the potential move just to have any kind of a rally, you can make some money without having to take all your dough and buy stock. So I think there's for sure opportunity in doing this. But I at least for me, I'm 2 weeks early, although I'm not, fully committed yet. But I still want to do more. And, I just figure in a couple of years or a year, but like a year we'll be out of it. But as of right now, but anything with call wise for me is at least 6 months at this point. Just because of the obvious, right? Like COVID, but things can turn around if they do. It'll be good. But I like this idea. It's on the bleeding edge for me for being able to make the return you want by September. But I think the COVID thing goes very fast, the change in perspective. So I think it's got a decent shot, to be honest. I kind of made that a long haul, but decent. I think it's a decent idea.
Mr. Rock Lobster, liking a little bit of recovery in good old First Bancorp. We'll see. If that is indeed the case out here, we'll put it in our to be watched category just because I wasn't going to, but just because the Rock Lobster liked it. He'll get a chance to revisit his prediction here, and we'll get a chance to visit with some of you guys. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. Looks like Mixler is still having those problems, so I apologize if you were trying to listen live and can't. It's not us, but unfortunately that seems to be the case. Again, you can get it on the podcast like everybody else out there. Keep those questions coming. We'll get to you here on the show. We'd like to ask you guys questions, too, like we did this week. We asked you, hey, we're back in that rarefied air, threatening or at all-time highs in most of the major indices. Let's focus on SPY. We got weird things clouding the future, elections, pandemics, trade wars, all that fun stuff. We're in uncertain times. So quite frankly, right now, what position, if any, are you comfortable putting on in everyone's favorite go-to index ETP, a.k.a. SPY? Gave you 4 choices. A bullish position number 1, which is just naked long SPY. You're just buying SPY. I want to get myself some SPY. Number 2, another bullish, maybe a little bit more mitigated bullish trade is picking up a call or call spread to the upside. So maybe parking your capital and putting a little bit to work in calls and let the rest kind of relax. Number 3 is no way, Jose. I'm in cash completely. And number 4 says I'm going to the dark side. I'm going bearish. I'm going to buy puts or I'm going to buy put spreads. Very straightforward. Obviously, there's only 4 choices. We can't put a legion of things, ratio, put spreads, iron flies, all that stuff. Can't do it. You guys can write in with your suggestions, but it's hard to put all the various nuances in there. We've got to be pretty broad strokes with our Twitter poll. That said, coming into showtime, actually coming as of a few minutes ago, what do you guys think? Well, first off, if you guys have a vote, have at it. And then B, more importantly, what do you think our audience is voting for? Mr. Uncle Mike, we'll start with you, sir.
I think that for right now, what I'm looking at, if I had to pick, I would say that I would just want to be long SPY. And the reason for that is that you can just wait it out. And then for the audience, I think they're all saying no way, Jose. That would be my guess.
Uncle Mike, diving both feet into SPY right now. Interesting. Intriguing. I would not have guessed that for you. Mr. Rock Lobster, same question for you, sir. What do you think the audience is picking, and what is your vote if you have one?
Let's see here. What do I think the audience? I think the audience. I would say the audience is saying that I'm sticking in cash. Me, like I said, I like calls and call spreads at this point. Depending on the name, sometimes they're just short puts. But I'm kind of that category. But I'm like the long call spread category. Looking for sort of a little trip back, so to speak.
Interesting. Well, our audience is looking for a trip back to the dark side here. As of right now, actually, looking at the live results here, 36.2% are on the bearish tip, so long puts or put spreads. Followed by number 2, no way, Jose, I'm in cash with 26%. So you add up those two, a strong majority of our audience is either bearish or getting the heck out of Dodge. Only 22% saying they want to buy calls or call spreads, and only 15.7% agreeing with Uncle Mike. They want to just go whole hog with a little bit of long SPY. If you guys have thoughts, you guys know where to find us at Options. I think there's a day or two left on this poll for you guys to make your thoughts heard. We love getting your sense of this thing. You guys have been fading this rally from the beginning. I can't really say I blame you. Obviously, the broad market disagrees. But, hey, our audience, a skeptical lot out there. Just like Sound Dive Trade, he chimed in on our poll, said, looks like we aren't selling off based off these votes. So maybe he's taking the contrarian view because so many of our audience is fading this rally. He's thinking it's going to continue. Either way, interesting stuff out here. Keep those votes coming. Next up, Big Dog. Big Dog wants to know, is S&P skew showing a strong inclination for hedging at these new all-time highs? Loving the network. Long-time listener. Well, back at you, Big Dog. We love you guys and all of you out there who listen, have been listening for some time. We love all of you out there. Even the newcomers, we like you guys too. No, there's a lot of you out there these days. There's a couple of ways you can check this for yourself, Big Dog. You obviously can go into your options chain, look at the skew, 25 delta call, 25 delta put out there in the S&P. That's a little bit intimidating. You kind of just want a shorthand way to do it. The CBOE skew index will do this. Now, it's for the SPX, obviously, but it's going to be the same kind of beast out here. A couple of caveats with that, too. It's a weird index. It quotes it as this kind of arbitrary number. In this case, it's ticking up right now pretty strong at about a 144.5. It tends to top out around the 150 odd level, so we're getting pretty top heavy. Now, I urge caution with that because also that skew index, it takes the call wing and the put wing and lumps them together in one number. So that number, that change could be caused by a change in the call wing and or the put wing. You don't really know from that one number, which is why when we get into TRIFO in a little bit, I like to break down the call wing and the put wing separately. That's more informative. Mr. Rock Lobster, would you concur with that? What would you say here for Big Dog who wants to know about the inclination for hedging at these levels, sir?
I would say that just the way that we look at skew, because we just look at the money call to the downside put. It is not super frothy, although it has some froth, especially with VIX around 30-ish. It's pretty, it actually has a print. Let me see here. So, oopsie, I'm just trying to give you an exact number from my numbers. Poop. All my data just went blank. Thanks, LiveVol. Hold on. Anyway, it looks like it's in, from a skew point of view, where we are, where VIX is. So don't remember, not only have skew, but it's also, how high is VIX in general, right? So if you have pumped VIX, so I would say it's definitely in the upper band. It's not as high as I've seen it, but it's definitely in the upper band.
I'm looking here. Sometimes it's hard to get accurate historical data on the skew index itself, but it looks like here it topped out this year so far at 148.27, and we're at a 144.5 right now. Again, there's multiple moving parts to that, which is why I don't normally quote the skew index, but if you want just a kind of shorthand, if you want to do the longhand route, you got to go through all the things we talk about on this show and on vol views and everything else, talking about where the S&P is, talking about what the level of volatility is, all these other contextual things that give you more information about the vol surface and indeed about what's going on from a vol and skew perspective. But if you just want the shorthand, the skew will give it to you. It depends on kind of your interpretation of how valuable that info is or not. All right, quick up here. Frequent listener Scott Somer, he had a question and it got answered for us, which is kind of nice. Makes our job easier. He asked if the print that went up on June 11th, the 48 million contracts, was that a single-day record for OCC? And before we can get to him, OCC responded to him and said, yeah, it was actually our second highest single-day record. Actually, the first highest, I believe, was still in February 28th, I believe, out there. Check out our last show. We broke down all the numbers for you in terms of records out there. But I love when our audience, including our friends over there at OCC, chime in to help set our listeners straight. We love you all out there. Meanwhile, we got to keep on rolling to our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is the portion of the show where we tell you what we're watching for the rest of this week into the weekend, at least until some of us can gather here together on the Volatility Views program tomorrow. I've been off for a week or so out there. It'll be fun to get back together out there. Let's go back around the horn. Let's start with the uncle list of Mike. Sir, what are you keeping an eye on as you're pondering diving with both feet into SPY, like you said from our poll, sir?
Well, that's only if I had to pick with it. So I do have exposure to SPY, but I think that there's a lot of ways with which to do it beyond the scope of the poll. But what I'm watching is just to see, like I had talked about earlier, are we going to get the death to case ratio? What's going to be more important to the government officials in terms of what they're going to go with for whether we close down again or not? I think that's very important right now. From a number standpoint, 300 and 320, been saying it for over a month now, and we continue to be in that range. So those are probably the two main things with which I'm watching.
And, of course, your long SPY, which is my job as the host is to put words in your mouth. So there, Uncle Mike, diving with both feet into SPY as we speak, listeners. Follow him in. Dive right in. The water is fine out there. Mr. Rocklops, the same question for you, sir. What are you watching for the rest of the week, at least until some of us can gather here together again tomorrow on Volatility Views?
I mean, if you want to think what the market is really looking at, let's see how we handle if Main Street stocks recover. That's it. I'm looking at that. as of right now, they're still in the ash can. So, unless you have a big shovel, so I'm still a little shoveling on that. The tech is kind of helping, but it's certainly not making any money for sure. So, but that's what I say. Main Street stocks start moving, then we're going to have something. But right now, I'm not seeing it yet. And the market, I think just sentiment is just freaking poor when it comes to Main Street business. So that's what I'm looking at. That's what I'm looking for. Any kind of green shoot for a turnaround. And it's just not quite there right now.
Unfortunately, we are there at the end of the show. Listeners, if you're saying I need more in my life, I need more in my ear holes, well, stay tuned. We'll be back in exactly half an hour to talk all things a small cap vol. Who knows what else? On TWIFO, I'm going to let you guys kind of dictate where we go. Maybe it'll be lean hogs. Maybe it'll be gold. Maybe it'll be, who knows, non-ferrous metals. Maybe it'll be corn. Maybe it'll be fluid milk. Now tune into TWIFO every week to see what's going on. We'll also see if I can dig in, maybe try to find a way to get you. All you go folks who soldiered through that chat, I salute you. You're stalwarts out there. We'll see. Hopefully, maybe we can get something going for you in between. So FIFO won't be quite as staccato on the chat end out there. But before we go, let's go back in around the horn. Let's start with the Uncle and Mike. Sir, if folks are intrigued, they want to talk to you about getting long a lot of SPY, where should they go? What should they do?
Go to stcharleswealth.com. Feel free to contact me and learn a little bit more about what we do. I'm a financial advisor who's not afraid to get into SPY because I know how to hedge it if I need to.
He's the guy who likes the SPY. There you go. Did I give you a new jingle or what, Uncle Mike? What do you think?
I love it. I love it.
There you go. Call him up if you too like SPY, or maybe NASDAQ, or maybe RUT, or maybe you like Apple or something else. Give him a call, and he'll talk you into buying it, but also how to hedge it. So that'll help you. stcharleswealth.com. Click on the Fox for all sorts of fun and fabulous prizes, which are non-existent, but someday, hopefully, his compliance will let them do that. That'll be really fun. In the meantime, I'm just going to keep saying it until it happens. stcharleswealth.com is the place to go. And if you also want fabulous prizes, maybe they got some. Let's find out. Mr. Rock Lobster, what do you guys have in store for our listeners if they head over to the land of the pit?
Optionpit.com. Look at our Trading Legion, our Vol Edge, or our Sharp Bets. They're all up money this year, doing very well, teaching people how to trade options in a risk-controlled way. Learn how the options work. Learn how to control the risk. That allows you to make some money because you need to have some money to make some money. So don't want to lose all your money. So anyway, come out to optionpit.com, go to the memberships area, and sign up.
Optionpit.com, click on memberships, then you're off to the races with the Legion, the Fun Vol Trading Club, the Pit Chat, all that good stuff, and a lot more. Optionpit.com is the place to go. And on behalf of the rockingest of lobsters and Uncle Mike and you myself, thank all of you out there for downloading, streaming, subscribing, for suffering through Mixler today. And we'll see you back here in a little bit for TWIFO, and then back again tomorrow, 1 o'clock for Vol Views, and it kicks off again on Monday for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.